Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. This is going to be your daily cryptocurrency market update, and it is Wednesday, so I hope you've had a wonderful one. We are going to be covering the events that are taking place today. We're going to be forecasting and speculating on the cryptocurrency market as we do, and also bringing into focus the traditional markets that have such a bearing on our significant but small space. So we're going to get into that in this video. We're going to start with a little bit of TA. Today is a very important day because you have Powell's speech on the GDP revision, private hiring, and more. So Powell is very much going to set the tone for things moving forwards. We looked at Bullard's comments. One of the Federal Reserve members, Bullard, essentially came out, I think it was not yesterday, but the day before, so Monday, and was actually saying that, look, markets are way underpricing what we're about to do because we have a target inflation of 2%. We're currently at 7%. We saw the Eurozone inflation slightly easing today. This gave us a bit of a weak dollar this morning, but there's a bit of a trait with the dollar. It tends to be weak in the mornings, certainly for me in the UK, so coming off the back end of the Asian session, and then actually starts to sort of stick its chest out towards the end of the day. This happened yesterday. I actually got caught, and I'm still somewhat trapped in a break-even short long at this point. And you guys know that essentially we have been looking for long since we had that short squeeze around about 15K. So here we said, look, you're going to get a short squeeze. Everybody's too aggressively. Sure, everybody and each and every YouTuber out there, Twitter account was saying short, you know, it's going to zero, this, that, and the other. And then you essentially had a short squeeze, and this has sort of kicked off more of a rally. And here we were actually still bullish. We had this slam down, which had a lot to do with BlockFi, also the dollar reasserting. And then the dollar has been slightly weaker. And the reason we've essentially said you're going to get a bit of an extended rally here is because we think the dollar is going to be floppier for longer. So I'm a dollar bull, ultimately. I'm all still in dollars. I think the dollar goes on to make a new all-time high. Sorry, not all-time high, but the Dixie goes on to put in a high higher than the previous one that we've seen. So I think that the Dixie is going to come back up and above 1.14. But I think that this is largely going to be on an event. And I think this will cause Bitcoin to have that next leg lower. And with us longing the market right now, before we get into the news, I just want to finish up on the technicals. It's kind of risky, right? I've described it to my patrons as like playing Russian roulette. So we're trying to catch along here. We're trying to play the game of trading, day trading. But the issue is we know that the gun is loaded, which means the market is going down at some point, right? We just don't know whether it's here, although we've largely caught this move up. We don't know whether potentially it's here, which I can still see Bitcoin getting to, or whether potentially we have a very low CPI print. It comes in, you know, a lot lower than estimates, and the market gets a little bit of a fruitful rally or some sort of an impulsive rally all the way up here. So this is a little bit obviously less unlikely or less likely than here. And of course, we've already reached our first target. So we're looking for targets to the upside. But the eventuality for me, guys, is that you do get that downside. I just want to remind people why we're actually somewhat bullish on the short term here. And it has everything to do, have I still got the RSI up, with this bullish divergence in the RSI. The last time we had one of these, and we actually looked at this as a scenario forecast leading into a capitulation event, which we think is absolutely coming in the next year or so. And we want to be out the markets for that. Last time we had one, this bullish divergence led into March 2020. And we're essentially calling for a similar scenario. So we're calling for something like this. Let's zoom in. So we had this bullish divergence here. You got this uptick, and then we had this really harsh slam. And this is kind of what we've been calling for here. Something along these lines. We've already embarked on the move to the upside. I think what we had was we had the Fed come out and go, oh, with the FOMC, we need to kind of watch what we're doing with interest rates now and maybe sort of take our foot off the gas a little bit. Everyone went, oh, this is amazing, fantastic. But this is not a pivot, ladies and gentlemen. Them slowing down interest rates means they're continuing to do them. That's not a pivot. That's still very hawkish, especially when we've gone from zero interest rates to where we currently are. The Fed's Bullard essentially came out and said, look, we are going to, and please watch yesterday's video, by the way, guys, because we talk all about it and we actually look at the 30-day Fed Funds futures rate. He basically said, look, we're looking at 5 to 7%. We're at 4, just under 4 at the moment, or just at 4. You know, that could potentially be another 3% if they get to 7, another 1%. It's all very detrimental and takes money out of markets. So we do still kind of expect this to play out. And we're seeing the sort of fruits of that so far with this rally from the short squeeze. I mean, Bitcoin's only up, to be honest with you, round about 8.7% today. Some altcoins are absolutely killing it, like Chainlink, for example, which is up a whopping 33% today, 34%. But ultimately, you know, you're playing Russian roulette. You know, how far does this go? And actually today we have Jerome Powell coming out and speaking. The chairman of the Federal Reserve is set to speak on Wednesday at Brookings Institution. It is a major scheduled speech for the Fed's official before the next monetary policy meeting in December. So they're going to up rates this month. I think the real question is 25 basis points or 50. Then very unlikely they're going to do a 75. We're also going to have a CPI print. So what that does that fuel this rally into their meeting? Or the other thing that you've really got to watch is what's going on in China right now. So how is this going to affect inflation? So we're seeing inflation come down marginally across the board. Natural that what comes up must come down, okay? But the problem that I have is I think inflation is going to stay more persistent for longer. So even if it comes down to 6, it might stay there for a while. And with what's going on in China, you know, there's quite a good reason to suggest that. Transitory inflation talk is back, but economists say higher prices are here to stay. So I think that's the case. I think you've got to watch what's going on with China. I think there's going to probably be a reassertion of inflation, and this is going to put markets back in their box. And I think, again, really I paid a lot of attention to what Bullard was saying in regards to markets largely underpricing and under-expecting what the Fed is about to do. And I'm taking that warning with, you know, we're playing Russian roulette right now, longing, because we know that ultimately pain is on the horizon. I was going to talk about the global liquidity cycle because there are broader cycles that tie in with cycles. And of course, we know that liquidity is not free flowing like it once was, given the restrictive conditions monetary policy is set. And we essentially know what this leads to in terms of price go up or down. Price goes down when monetary policy is tight. When monetary policy is loose, like what we had from March 2020, markets absolutely rocketed, vice versa. And essentially we're on this sort of downtrend, and then potentially we're looking in 2023 for some sort of a bottom to take place and continuation upside. That's kind of what I think happens, but I think there's a breaking of something that causes them to have to reduce and actually deduct interest rate rises. And this is going to allow markets to fly. But actually, what you'll notice is, and I'm going to do a video for this, a video specifically talking about this, is when they actually decrease the Fed funds rate, so the interest rate for the US, typically markets actually fall off when they start to do that quite aggressively. And that's because typically something's broken. And this is what I think we're moving into. And this is why I think we have this kind of almost another March 2020 setup, or going into March 2020 setup, where we'll probably get a bit of an extended rally. Maybe we even retrace this whole FTX move. Remember, this was caused by FTX. Given the scale of FTX, I feel like the market should have sold off a hell of a lot more. And why hasn't it? Well, maybe it's because it's setting up for that. And how do we get there? So we've ultimately been a bear and remain a bear, and this is a bear market. So we're on the side of the trend. But we're trying to predict how we get to that downside, and easier said than done when it comes to markets, because anybody that trades the markets will know that whatever you think they're going to do, they will often do the opposite. However, you know, your trading account will speak for you. So is this the rally over? I mean, there is the potential for that. We've had a decent move. From a trading perspective, you probably would short this, actually, because of how significant it's been. So if you're looking for risk to reward, you've got a far better risk going short here than you do long. And people may get on board with that. Maybe we get some sort of a retracement and then do something like this. Maybe the Fed's speech isn't as hawkish as people are maybe expecting. Maybe they have to kind of come out and go, yeah, we're looking to, you know, be a little bit less harsh, and markets really take this, and then potentially inflation pops up and comes out higher than expected. And then this sets the whole tone moving into February will be the next rate hike. And so on and so forth. But the Fed actually have a blackout period over the festive period. So essentially they will have a sort of quiet period going into Christmas. And that is, I think, a little bit of vulnerability around that. So we'll see. We can definitely still see a rally continuing. I think today is going to be interesting. Like I say, we had the Eurozone inflation coming down slightly. So this is because energy's kind of somewhat subsiding, but there's a lagging effect here. Typical pattern here with the dollar. It starts off very weak and then actually reasserts as the day goes on for us in the UK. Just to give a bit of pre-context on markets, gold is up, the Asian market's up, the FTSE's up, the US futures are up, and we may be on the cards for a green day. However, you've really got to watch out for Powell's speech. He may say something that completely throws a wobbler for markets. And there's going to be volatility going into this because people are going to position, and that's just how this game goes. So lots of things to watch. We'll maybe talk about the global liquidity on another video, as I've gone on for long enough. On that note, guys, I'm going to love and leave you. So we are still biased on the short term, that there's potentially more upside to be had. But mid to long term, we know that there's eventual downside. So right now, we're longing the market. We are very much playing Russian roulette and could get our head blown off in regards to trying to long this market with any kind of leverage. So just be very careful out there. Make sure you've got your stops. And yeah, we will see. So have a good day, guys. Watch out for what the Fed says or Jerome Powell says later on. We know that Bullard's come out and sort of maybe given that little look. We are going to be a lot more aggressive or as aggressive as we need to be to get inflation where we need it to be. Powell is probably going to reiterate that, but may say, okay, we're going to sort of see how the interest rates that we've got play out. And then potentially something happens that means they need to go forward. Or the flip side of that means that, you know, something's broken and they need to reduce it. That means markets will sort of free fall, and then we can sort of get back in. So make sure you hit that subscribe button if you haven't already, guys. If you've enjoyed the video, a like is always appreciated. So as a comment, and I look forward to seeing each and every one of you in the next YouTube video. Thanks a lot for watching, guys.